Instead of splitting up your mortgage payment, I'm going to show you how to pay off a $400,000 mortgage in less than 2 years. And I'm going to show you how to do this without making any more money or getting a second job. My client had 26 years left on his mortgage, and I took that down to 23 months. This strategy is going to save him over $140,000 in interest. All we're doing is utilizing one strategy, the first lien HELOC. There's one thing that this loan requires though. It's a different mindset shift on how you attack interest on your mortgage. Instead of getting fixated on an interest rate, which is what the banks and the entire mortgage and real estate industry wants you to do, this loan is focused on cash flow. Every dollar that gets deposited into this account lowers our loan balance, which effectively lowers the interest cost. All you're doing is utilizing this HELOC just like you would your checking account. Here's what his loan looks like. We owe $400,000. He has a 3% interest rate. He's been in this loan now for 4 years. His take-home pay every month is $30,000 a month. That's what's going to be deposited into our HELOC. And I already know so many of you are going to be yapping in the comments. Well, oh, of course he makes 30 grand a month. He should pay his house off in 23 months. That's not the point. The point is the fact that we can get out of this mortgage as fast as we can without doing anything different. So change the mindset. At the end of the month, after his bills and everything's accounted for, he's got roughly $18,000 left over, which helps pay down the mortgage, all while still giving him access to his funds because this line of credit gives you access for 30 years. $400,000 loan, it would take him $576,000 in principal and interest to pay this off in 26 years. We're taking that same $400,000 debt, paying it off in 23 months, saving him $143,000 in interest. The average interest rate on this loan is 8%, and I can already hear you in the comments. Why would you leave a 3% interest rate for an 8%? Well, one, we're saving all this time. Two, we're only paying $33,000 in interest on this mortgage, which is the equivalent of an effective APR of 0.5%. That basically means we have an equivalent of a 30-year fixed mortgage at 0.5%. If you don't know what effective interest is, go look it up, understand what that is, because that is the big difference between a 30-year fixed mortgage and this adjustable rate of what we're using on this HELOC. And again, if you want to argue about it and say, why would you leave a 3% interest rate for an 8% interest rate? Well, here's why. We're going to be debt-free in 23 months. We have access to a $400,000 line of credit, which we're going to use to go buy more real estate and get rich while you guys can continue to pay your mortgage at 3%. He would have only paid $20,000 down, still owing $379,000 on his house. If the amount of interest that you're paying on your mortgage doesn't piss you off yet, I would strongly urge you to go look at your amortization schedule and look how much interest you're going to pay the bank over the 30 years you have your